Welcome back to Your Average Investor. We're going to be talking the week ahead. We had a pretty exciting week this last week in the stock market with Nvidia reporting earnings and having a nice bump. The S&P 500 again hits all-time highs before having a big sell-off one day that was then just eaten right back up the next. So let's go ahead and see what we have to look forward to this week. First off, Monday the market is closed for Memorial Day. Tuesday nothing really exciting is happening. Wednesday, though, we have CRM reporting earnings after hours. CRM is Salesforce. They do a lot of business-to-business software. So if you take a look at them, we're going to boost this back out. Let's go to maybe like a weekly time frame here. Here's CRM for the last several years. You can see that they're hitting at a pretty big high point. And generally, when they have a sell-off, within a year or two, it's now eaten right back up. So it begs the question, what's going to happen here, right? They've had a fairly strong year and a half, moving from $128 a share to $320 a share nearly, before popping back here to around $270. I could see this being a temporary top, if you want to call this a double top here. If we add a price line here, right, that could be a nice little double top that's formed, and we see a move back down to the 200 range. If they have any kind of reporting like Nvidia, though, and they use the keyword AI a lot, maybe they pop back up to all-time highs. I'm not seeing anything too convincing one way or the other without digging into their financials. I do know a lot of companies love their product, and it looks like they also, I just realized this, they just issued their first dividend as of last quarter. So that's a pretty exciting move for anyone who's been invested in CRM long term. I'm curious actually, what was their IPO at? Look at this, IPO around $2 per share. They did do a 4-for-1 stock split, so that would have been like $8 a share pre-stock split. Oh, excuse me, $4 a share, so like $16 a share. And just an incredible path to victory since then. Next up is HPQ. HPQ also reports earnings after hours on Wednesday. Looks like they've been in a little bit of a channel recently. Let me zoom. Let's go in like this again. So here's a little bit of a channel that HPQ has been sitting in with floor here around 27.5, and you could probably put a ceiling here right around $33 or so. A few times it broke above, and it maybe was looking like it was going to start creating a new channel to trade in, and then came right back down, and it's just been within this channel. So what I would look for is some sort of continuation above this channel. So if you look, you can see they're kind of just pittering around right towards the top end of this. I wouldn't be surprised to see it just go completely flat on earnings. I don't see any compelling reason to buy this one way or the other, but it's definitely one to watch. If the stock breaks above again, there might be a nice little continuation if there's a solid earnings to play a small trade to the upside there. To the downside, I don't know if I would really play much to the downside. I think I'd hold off on the sidelines there. CHWY also reports on Wednesday. This, of course, is not investment advice. I'm just talking my own stuff. CHWY reports Wednesday. They used to be a stock market favorite when Ryan Cohen took them and basically resurrected the company and then jumped from CHWY to GameStop. And since then, you can see here, IPO at 36, sold off all the way up to 120. And now they're sitting at basically at all-time lows, about 50% off from the IPO price of low right here of $14.50, right now sitting at $16.50. And it looks like there's a little bit of a base that's been forming. If you add a little price line here, we've got a bit of a base that's been forming. And other than that, it's really just in a big downtrend. So downtrend with a base, I like that to start accumulating shares if I like the company long term. It's interesting to see that they actually are operating at a profit for the last several quarters. They've had a couple losing quarters back here, but the last several quarters have all been operating at a profit. So this might be one worth digging in and doing a little more research on the financials, the fundamentals, to see if it's time to build a position in CHWY. Now, the other thing with CHWY is the options chains. They're not, they're pretty liquid. So if you wanted to do covered calls or cash secured puts, this could be a good place to do it, right? Earnings is coming up this week. Maybe you throw in some cash secured puts just to bank on the fact that CHWY likely isn't going much lower. Maybe what I would do is throw in like these put 15s if I wanted to get in, because I'd be happy to get in at 14.5 again. I'm not saying I'm actually going to do this. If I liked the financials, I'd dig in and maybe do something like that. Next up, we have Advanced Auto Parts, AAP, also reporting earnings pre-market on Wednesday. And they've had a fall from grace. Would you look at that? They were all the way at $244 per share before having a massive sell-off all the way back down to $50 per share. A little bit of a recovery, sitting now at $70 per share. Interestingly enough, let's look at this several year price line here. I'm going to add this price line all the way back here. Check this out. Acting as a little bit of resistance, a little bit of support before basing off. Came right here as a support again. There's the COVID dip right to that support level. This initially was at that level, sold off a little bit, and now it's hovering right there again. Nice to see they're still paying a dividend, but it does look like they cut their dividend. I wonder if that's part of why they're trading lower, if they announced the cut back here, or if it dropped and then they announced the cut. One way or the other, the dividend's a little bit lower than it has been in the past. You can see they were paying $1 a share, $1.50 a share. Now they're paying 25 cents a share. So you get $1 per year instead of $6 per year in dividends. Now, Advanced Auto Parts, generally, I would expect this to be a company that continues to perform moderately well. I don't think that they're going to be anything like super exciting, right? All they do is sell car parts, obviously, and they're not going to be building any new tech. So if you like it as a dividend play, it might be not too bad to get in here and start building a position and just dollar cost average your way down and look for some appreciation to the upside. There, it's not my favorite play, but I don't think it's the worst play either. I definitely wouldn't play options on this over earnings because the options are going to be priced quite expensively. So I'd just start, if I liked the stock, I'd just start accumulating shares there. Next up, we've got Costco. Costco reports Thursday after hours, and Costco has just been absolutely nutty. I mean, this is like one of my favorite stock charts to look at to say, man, I wish I would have been buying this back in the year 2005 when I was still a minor. But you know what? The good news is there's always companies that you can buy that are the new Costco today. And look at that chart. I mean, if you even had bought at the COVID dip, where's the COVID dip? Right here. Is that the COVID dip or is this the COVID dip? That might be the COVID dip. $300. You're up almost 200%. Costco pays a really healthy dividend, and they've been announcing these special dividends occasionally. So they did a special dividend a while back for $15 per share. Just absolutely wild. And they've done that a number of times. So I don't know if this rally can continue, but I wouldn't bet against it. I probably wouldn't play this one. I just wait to see how it shakes out. It doesn't look like there's any type of setup there for trading earnings unless you just wanted to gamble on some YOLO calls or YOLO puts, right? Like maybe you go snag these 775s for $500, $400, and if it dips back down to $700, you're going to make bank on that. But of course, it's a go to zero type position. If you're not right, it's going to go down real fast with IV and theta decay since there's only a few days left to expiration. In my estimation, on any major dip, Costco is a buy if you're looking for a long-term hold. They've got a great dividend. They've got a business model people love, and it looks to me like it's going to continue going that way. This is a really fun little pattern to see. Occasionally, you'll see something like this in the market. Oops, not a price line. I want to add a line like this so you can see this squeeze that starts happening, right? This coil. So you've got this coil that Costco starts trading in, and then it just breaks out and rockets from there. There's so much happening in this coil that it has to break one way or the other. Eventually, it breaks above this previous all-time high before moving up. So I'd probably look for something like that again to trade Costco. Next up, we have DELL. DELL reports earnings also after hours, and you can see they've had a very nice rally. Wow, way more nice than I realized. Look at this. Is this really? This is it. Did Dell really? There's got to be something funky here. Hang on. Dell IPO date. I feel like something's messed up here. So generally this means IPO when you see this first gray bar here. Maybe they changed their stock ticker or something like that, because they did their IPO in 1988. Anyway, I'm not really sure what's going on there, but $12 per share here. Is that? Gosh, I feel like I gotta verify this before I. Nope, that is accurate. Wow, imagine had you bought the dip there, you're going to be up over 1,000%. Just an absolutely incredible gain, 10x gain there. That looks remarkable. To me, this looks like a big portion of this is the AI rally. And personally, I think the AI is a bit overblown right now, and we're going to see a lot of these big rallies fade back into normalcy. I mean, you saw the same thing with Moderna during COVID. Everybody's like, oh my gosh. I remember posting about this on Twitter, being like, when Moderna was in this range of like 400 to 450, and I was like, there's no way it sustains, and everybody just starts hating on me instantly. It's like, oh, you don't understand mRNA vaccines and this and that and whatever else. And I'm like, they went from $11 a share to $450 a share in the course of 2 years off of literally an emergency vaccine via COVID. There's no way that's sustainable. And sure enough, they sold off pretty significantly over the next year. Back down, they hit a low here of about $70 per share, which again, still, that's excellent. If you bought in before COVID and you were in at like 15, 20 bucks a share, that's still some excellent gains. They've managed to capture some attention again recently. They're sitting back at 160. But this type of chart, like let me just zoom in like this, right? Like what does this look like if I zoom in here? This looks like NVIDIA. This looks like Dell. This looks like all the SMCI. Look at this, SMCI. There's SMCI, and oh, they've actually kind of had a sell-off. But you can see here, right, like, it's the same pattern. It's the exact same pattern on every single one of these. So, yeah, NVIDIA is definitely a market leader, and there's a lot of bullishness around this right now. Personally, I don't see how this kind of a rally is sustainable. I mean, even Tesla's not in favor anymore, but even when it was in favor, like, let's just go right back to here. You can see, right, big rally up, and then there's eventually a big sell-off where it brings it back to normalcy. And then they did eventually move up again, sell off again, move up again, and look at this, right? So here's where you'd see there's got to be something like this in the, this is my opinion, waiting in the wings for a lot of these AI hype stocks, whether it's NVIDIA or Dell or someone else. I just can't imagine that all of them sustain this kind of a rallied frenzy for all that much longer. Now, am I going to predict when that's going to stop? I have no idea. They could all go up another 40, 30, 20, 50% from here before coming back down into normalcy. But we'll see what happens. Personally, I might actually take a short position for earnings. I'm going to have to dig into this a little bit further. But that one looks, so far, it looks the most interesting to me. Next up on the list, Marvel. We have another, we've got another chip company here. And they're still high, but this is interesting. So if you want to look at this as potential lower, so here's their all-time high up here. Come on, place that for me. There we go. And then let's add a little line coming like this, right? So we've got maybe a lower high here, and technically this is a lower low than we had here. So a lower low followed by a lower high. There might be something there technically. Have to dig into that as well. But interesting earnings coming up on Marvel, and that's after hours as well. Dollar General DG reports earnings before market on Thursday, and they are, look at this, they've had a nice little sell-off, little bit of move back up, and so far they have continued to increase their dividends. What I like about that is their dividend yield right now, even though it's relatively low percentage-wise, 1.63%, it suggests that they're in a healthy enough spot that they can continue to increase their dividend over time. as inflation goes up and the stock market goes up, likely that dividend continues to go. If I'm going to look at this from a strictly technical perspective, this is my ceiling that I'm worried about right here. You can see a nice big base here that acted as a pseudo resistance for a while and then finally broke through. Little bit of support here before breaking down and then acted as a resistance again. I would not be surprised to see a move down on earnings, and I would probably have some sort of support down here at where that previous low was. If they do break through on earnings, then I think this is the next area that is of note, right up here. Maybe just a little bit higher than that. We'll take it right up there. It's about 184. So Dollar General, I'm going to be watching this one. I like this setup, actually. I might play this to the downside, might play this short. Ulta Beauty also reports earnings. Let's take a look at Ulta Beauty. They had a little bit of a double top here coming down, maybe basing on this support zone here. I wouldn't play earnings, but what I would do is I'd play a continuation on earnings here. Earnings are hard to predict, but oftentimes the post-earnings rally or post-earnings sell-off happens for multiple days. Not always, but often it does. And so what I would look for is if Ulta falls on earnings, right, if they fall through this support zone, next major support zone is going to be somewhere right around here at like $300, just over $300. Say they fall down here, I'd probably take a short position with a tight trailing stop and see if I can capture some downside potential. Same on the upside. If they pop up, I'd look to play. I would guess they don't pop all the way back up here unless they just have an absolute blowout earnings. I would guess they stall somewhere in this middle range, right in the middle of these two. You can see where they kind of stalled 1, 2, 3 times there. And so those are the two major lines I'd be looking at on Ulta. BBY, we've got Best Buy coming up next. Let's take a look here. Wow, look at that. They've just been kind of ranging. They broke out for a little bit, but this is range city here. Let's add another price line. Go down here, add a price line above. Right there. We got a little one, maybe a little mini one here, and then another one up here. So those are the major lines for Best Buy, trading right in the middle of these two. You know, Best Buy, another great dividend one, and you can see they've continued to increase their dividend. Now it's sitting at almost $1 a share. That's actually quite remarkable. That I would have thought that maybe Best Buy would have cut their dividend at some point, like many of these other companies have been, but they have continued to march that dividend up, and it's, I mean, almost 100% up from where it was a few years ago. So what does that put the Best Buy dividend at right now? Their dividend yield is 5%. That's not bad. As long as they don't cut that dividend, that to me makes Best Buy a potential long-term purchase, potential swing purchase here if you're looking for a dividend portfolio company. Of course, people are all talking crap on brick and mortar, saying, you know, it's going to go, I mean, they've been saying it for decades now. It's all going to go to Amazon and whatever else, but I do think there's something to brick and mortar, especially for electronics. Myself personally, almost any time I buy electronics, if it's more than like a small $10 or $20 purchase, I'm going to go in store somewhere to buy it. I feel safer about it. I see these videos about how the post office and UPS people handle packages, and I'm just not confident that my package is going to get to me safely, get to me undamaged, and so I'd much rather go pick it up myself where I can see that it's working, take it in my own car and bring it home. But if Best Buy came down here to the $60 range, I would definitely be scooping up shares. So that puts the dividend probably close to a 6.5 maybe or so % yield. And again, assuming they don't cut the dividend yield at all, but I think they're going to keep it. I mean, it looks like they've been working real hard to keep increasing that dividend. And there's only, in my mind, more and more evidence that people will be buying home electronics. People love electronics for their home, and it's going to continue to be a gravy train for Best Buy. Now, of course, there's nothing innovative that they do. It's just a big retailer. But they... Gosh, that's interesting. I'm going to dig into their financials before I comment further on this, but I really like the play. I'll be watching these guys for earnings on Thursday to see what happens. GPS is next. This is Gap. They report after hours on Thursday. And that is such a funky looking chart. Wow, would you look at that? So we've got strong support down here. Really strong support at $10 per share or below. So if you ever see gap below $10 a share, unless they've been doing something really stupid recently, then that's a good buy zone, I suppose. Then you've got this really nice ranging area here. I'm gonna be averaging a lot of these ranges. Like obviously this has a range between 15 and 25 that it traded in, but the average right there was right at 20, and that started acting a little bit as some supports and resistances. You can see here, right, little support resistance on that $20 range. And then we've got another one here-ish at $30. It's just almost every $5 increment. That is hilarious. 10, 15, 20, kind of 25, 30, 35, 40, 45. It's sitting right on the support here. I would probably stay away from earnings, although they do pay an okay dividend. I would probably stay away from earnings and just wait to see what happens. And if we get a nice dip down here, maybe that's an opportunity to buy. I don't really like Gap all that much, but I'm not a big clothing person either. So like my wife will tell you, like I never buy clothes for myself. I just wait till my clothes are so worn out that people like think I'm homeless and then they'll buy me some clothes for Christmas or something like that. But I mean, I'm just not a big clothes person. The last one is JNW. This is Nordstrom's. They also report after hours, and yeah, they're at the lower end of things, so that's kind of interesting. If you're bullish JNW, that might be a potential to get in and hope for some sort of crazy rally again. I'm not a big fan of this. This looks like a pretty clear downtrend it's been in. Well, it is a pretty clear downtrend, and a really poor channel as well. So if you just go here, right, all the way down, and the nice thing though is that you do have this base. If JNW is trading down at this base of $15, I think that'd be a lot more interesting. The fact that it's just above it, that to me is like, I don't know if I'd want to play that. I really like scraping the bottom of the barrel if I'm looking for a turnaround play. So if on earnings they beat, again, I'd probably look for a continuation play, right? They beat, they jump up, I'd buy in with a tight stop loss and look to have that continue for a few days, see if it moves up to like 30, 35. But that's how I'd play that. Interesting week ahead. We're pretty excited for the week. Hope you guys are too. If you haven't already, please subscribe to the channel. We'll catch you next time. And if you haven't, if you were the raffle winner and you haven't emailed us back yet, please email us back so we can get you that money.